Welcome back to Alternative Investing with Mike. Let's continue with our current topic on the Chinese stock markets. In this video, I'll show you the top 5 most useful ETFs that you can invest in today. There are quite a few existing ETFs or exchange-traded funds which are based on the Chinese stock markets. The universe that I used for this research includes 46 China-based ETFs that are actively traded in the US. The basic data for this research can be obtained from etfdb.com. In this analysis to find the most useful ETFs, I have looked at each ETF's underlying index, size, liquidity, cost, volatility, and correlation. Most of the factors used in this analysis needs a little explanation. The fund size or total assets tell us how big the fund is, which indicates the overall demand for the fund. Like they say, size doesn't matter. Liquidity shows how much and how often the fund trades. For risk management, liquidity is critical in time of crisis. Cost. The expense ratio is how much you are paying to own and hold on to these ETFs. Volatility shows how much ups and downs that an ETF has experienced in each study period. Volatility is calculated using the standard deviation of daily closing price. This table shows the volatility of the research universe. Obviously, we typically want a lower volatility in our investment so we can sleep better at night. This chart is a matrix of correlation among the ETFs in our research universe. As you can see, many of the funds have over 80% correlation. For those new to investing, correlation in simpler terms is a measure of how close one thing behaves like the other. In this case, the correlation is based on past 90 trading days' daily returns. Please remember that the correlation is a mathematical measure and it is not necessarily stable over time, so we must update this calculation periodically. Underlying index of many of these ETFs are remarkably similar and have many overlapping stocks. Therefore, it is paramount to buy the ETFs which represent the right mix of underlying stocks to accurately express your view on the markets. This is where correlation comes into play. Correlation among different funds is one of the more important factors in this research. Many of the funds are remarkably similar in return. It is not necessary to invest in two highly correlated ETFs. The capital and risk can be deployed elsewhere. So, based on the criteria we have discussed previously, the top 5 most useful Chinese ETFs are: Number 5. ASHR. The Xtrackers Harvest CSI 300 China A-Shares Fund is the first US-listed ETF to offer direct exposure to stocks listed in mainland Chinese markets in Shenzhen and in Shanghai, and has the third largest total assets in our research universe. As we have seen from the last episode, CSI 300 is the main stock index of China. So if you want to get full exposure to China, ASHR is an excellent choice. Number 4. FLCH. Franklin FTSE China ETF has the lowest expense ratio among all the ETFs and tracks some of the biggest companies in China. Companies like Alibaba and Tencent are the 2 top holdings. Together, they comprise about 32% of the fund. Number 3. FXI. iShares China Large Cap ETF is one of the most popular China ETFs. It offers the best liquidity in the research universe, so one can get into and out of this ETF with the minimum slippage. Although it also offers investor exposure to the largest companies in China, currently it only has about 40% correlation with FLCH because it's composed of Chinese equities traded on the Hong Kong Stock Exchange only. Number 2. KFYP. CraneShares CITC China Leaders 100 Index ETF, which tracks the CITC Select 100 Index and takes a smart beta approach to systematically invest in Chinese mainland companies. One can find more about this ETF at CraneShares homepage. The attractive feature of this ETF is its volatility, with both the Chinese and the US markets experiencing large swings recently. KFYP offers one of the lowest volatilities in our research universe. The number 1 most useful China-based ETF is CHAD, the Direction Daily CSI 300 China ASHR Bear One-Time Shares ETF. In these uncertain times, with market volatility reaching extremes that we have not seen in over 10 years, it is a welcome sight to have an ETF that is designed to hedge our long-only holdings. Since we cannot easily sell short Chinese stocks and access to the Chinese futures are limited, CHAD is the next best instrument if you want to go short the Chinese markets to mitigate some of your exposure. However, be aware that this ETF is designed to deliver one-day inverse return of the CSI 300. The long-term performance may differ significantly from the inverse of the index that you may expect. Overall, given the correlation of the index and CHAD is minus 66%, and the chart showing the returns of the two is nearly a mirror image, we can see that CHAD offers a highly effective hedge for the portfolio. I hope you have enjoyed this quick analysis of the Chinese ETFs and find these 5 ETFs will be useful in your own investment portfolio. Thank you and see you in the next video. Be healthy and be profitable.